Assalamu alaikum. I am Rohul Amin. My student ID is 2310437150. And now I am going to discuss about navigating economic headwinds, Bangladesh Bank monetary policy. The latest monetary policy statement from Bangladesh Bank for July-December 2025 maintains tight monetary stance. Its core objectives are clear: answer inflation expectation, stabilize the exchange rate, and rebuild financial sector stability amidst elevated non-performing loans and liquidity changes. The imperative why this MPS matters. Key objective: curb inflation, bring inflation down and answer expectations as the primary objective. Stabilize exchange rate, ensure FX availability to support external stability and trade. Strength banking sector, improvement interbank market functioning and banking sector resilience. By mid-2025, Bangladesh faced confluence of macro-financial challenges: inflation soaring beyond the conventional 5 to 6% target, a volatile exchange rate, weak deposit growth, and stress within banking and non-banking financial institutions. The MPS emphasizes tight monetary condition until inflation significantly recedes, while using operational adjustment to elevate short-term market frictions. Policy overview: stance, target, and key decision. Policy poacher: a costly tight monetary policy aimed at disinflation while remaining attentive to financial stability risk. Restrictive conditions will persist until inflation shows sustained movement toward target banks. Headline: target inflation growth. Inflation reiteration of the goal to bring inflation down to a mid-single digit range, with conditional expectation for gradual improvement. Growth: alignment with government budgetary growth target, with growth support primarily from fiscal measures and structural reform. Key operational decision: policy rate maintained. The overnight repo rate was kept unchanged, signaling a courteous approach to core policy rate adjustment. SDF lowered. The standing deposit facility was reduced by 50 basis points to 8% to revitalize the interbank market. CRR reduction: the daily cash reserve ratio was lowered from 3.5% to 3.0 in March 2025 to ease banking system liquidity pressures. Liquidity support: continued selective liquidity support with a phased withdrawal of non-standard measures to restore monetary policy effectiveness. FX management emphasized fixed market interventions and policy alignment to stabilize the exchange rate and ensure liquidity. Significant change from previous monetary policy: a policy stance and rates. Previous stance Earlier 24 to 25 policies involved a courteously tight approach with repo rate at slightly lower level. A tightening occurred in earlier 2025 due to elevated inflation with H1 FY26 MPS focusing on operational tweaks rather than large repo movement. Corridor machines mechanism. The July 2025 SDF cut 8.5% to 8.0, marked a key operational change. This wasn't a conventional rate cut but a fine celebration to revive the core money market and improve liquidity distribution. Reserve requirement CRR. The daily CRR was relaxed from 3.5% to 3, a per MPS measure that significantly altered bank liquidity compared to earlier policies. This eased pressures from weak deposit growth and tightness, banking sector support and normalization. The MPS singles a move away from prolonged non-standard operation toward normalization, a deliberate shift from heavy ad hoc support to rule-based operation endorsed by the IMF. Communication and forward guidance. Clearer inflation-based guidance. The recent MPS provide stronger forward guidance, emphasizing tight monetary condition until inflation declarates evolving BBS communication for greater clarity and prioritization. Bangladesh Bank Operational Toolkit. Policy repo operation, day-to-day liquidity management and principal short team answer for interbank rate. Targeted liquidity support, temporary provision to systematically important bank under specific conditions with a signaled intent to phase out non-standard support. Apex intervention, direct market intervention and reserve management to maintain FX liquidity and manage the exchange rate path. Interest rate corridor, SDR 8% and SLF 11.50% guide intraday and overnight market rate for fine tuning. Cash reserve ratio, minimum reserves 3% bank must hold with BB, a liquidity relief measure. Open market operation, issuance repos of government paper and outright purchase sales to manage liquidity and sterilize FX operation. BB also employs macro prudential A and supervisory measure, provision rules, dividend restrictions, and regulatory instruments. Loan classification, forbearance to complement monetary policy and ensure financial stability. Evaluation: effectiveness of recent measures. Strength, weakness. Strength: target tweaks, SDF cut and CRR reduction address interbank dysfunction without understanding the disinflationary posture, providing relief while maintaining the inflation answer. Clear prioritization, explicitly prioritizing inflation containment offers a credible answer for expectations and support disinflation. Banking sector focus. Focus on prudential measure and phasing out non-standard operation is crucial for medium-term monetary transmission and avoiding hidden fiscal cost. Weakness limitation, acute trade-offs. A tight monetary stance can restrain provide demand and investment amidst already sluggish sentiment, posing short-term growth challenges. External dependency. Monetary policy alone cannot fix banking issues. It requires fiscal reform, stronger supervision, and NPL resolution mechanisms. Communication complexity. Frequent operational changes can confuse market participants if not clearly communicated, risk, risking misinterpretations of policy stance. Policy reform and recommendation. A short-term operational math. Clarify corridor message. Clarify corridor messaging issues. Regular explainer notes on corridor parameter change to prevent market pressures. Enhance fine tuning. Introduce short tenor repo operation to stabilize interbank rate and improve monetary control. Time-bound liquidity withdrawals. Provide targeted support with clear conditionality and excite plans to prevent moral hazard. Strengthen data publication. More frequent granular data on market rate and BB operation for faster policy celebration. Medium-term structural reform. NPL resolution framework. Enhance legal framework, recapitalization mechanism, and time-bound restructuring plan for weak banks. Deepen market. Encourages development of the money repo and the market for improvement transaction FX market outside are secured, move toward a more market determined transparent exchange rate regime with targeted invention. Macro prudential toolkit. Expand tool like countercyclicity, capital buffers, and sectoral provisioning, fiscal monetary coordination and governance, fiscal discipline, coordinate on debt, deficit, territories to avoid quasi-fiscal burdens on BBS balance sheet. Independence governance, strengthen BBS independence and increase transparency of decision processes. Communication and market engagement, publish a roadmap, clearly communicate criteria for policy normalization to reduce market uncertainty. Stakeholder engagement, conduct structured continuously with bank and market participants during policy design. Concluding remark, balancing act for stability. Bangladesh Bank latest MPS for S1 FY26 demonstrates a delicate balancing act maintaining salvageable disinflationary strength while utilizing operational level to address immediate money market dysfunction and support the banking sector. Mixed approach, K2 efficiency medium term strategy. Key source consulted Bangladesh Bank monetary policy statement including official results and circulars. The Daily Star analyzing and commentary on Bangladesh Bank tight monetary policy both BSS and national outlets. Reporting on MPD circular, especially detailing the SDF cut, CRR assessment, and operational changes. New coverage summarize from SIHA and various press outline on BB9's MPS. Financial research analyzing from business standard, branch PLC, research, and a local brokerage firm. IMF statement recommendation emphasizing inflation control and phasing out non-standard operation.